Pound is trading higher against the dollar on Wednesday, despite the fact that the UK experienced its sharpest month-on-month contraction on record, 5.8% contraction in March, their largest since the data started being collected back in 1997. First quarter GDP also fell by 2%. Now, that is quite extraordinary when you consider the fact that the UK lockdown actually started only a month before the end of the quarter. So you can imagine what kind of contraction we are now expecting for the second quarter of this year. Now, it's worth noting also that this number was better than what markets were actually anticipating, although we are seeing very wide ranges as far as forecasts are concerned. This is an extremely difficult environment in which to make forecasts for these data points, let alone for how the rest of the year is going to pan out. But as I say, the pound is trading a little bit higher, just above 123 against the US dollar in the aftermath of this data. It is also worth noting that a lot of the economic data that we've seen so far over the last couple of months have been given a relative free pass. A lot of bad news has now been priced into the markets, and given the wide-ranging estimates that we are seeing for the impact and the uncertainty that still exists over the reopening of economies, the speed at which that will happen, any second spikes, second waves of the coronavirus, all of these things are clouding people's judgment right now. And the end result seems to be that a lot of this data, the earnings season included, is getting something of a free pass. So really expectations now turn to how quickly these economies will reopen and how they manage to actually deal with the situation itself. A lot of focus is also on the central banks. You're looking at the UK and the US here, and a lot of similarities exist between the two. Both were criticised in the early stages of the coronavirus spread for the handling of the crisis and the speed at which the economies were actually locked down. Both of these have experienced extremely high numbers of cases and deaths, the two highest reported number of deaths in the world coming from the US and then the UK. And also we've got two central banks who are pretty much at zero interest rates, 0% interest rate, but not in negative territory. And both in recent weeks have been the subject of speculation about whether they could consider negative territory. Now, we have to remember that in both cases, in the aftermath of the global financial crisis, it was deemed that the damage as a result from a financial stability perspective could be too much but in both cases, which is why neither tampered with negative territory in the lead up to it. So this new speculation is very interesting. I'm still of the opinion that neither will go into negative territory, that there are other tools available that are going to be more effective. But the speculation is rife right now, and they could have impacts for the currencies involved. We obviously saw the Bank of England refrain from moving monetary policy in any considerable way at the meeting last week. But that doesn't mean that they will not do so in the coming months. But I do think they'll probably go down more the route of the kind of the quantitative easing route or the support for small businesses route rather than simple negative interest rates. Like I say, the benefit of which I think would be extremely minimal, if at all. But as far as the currencies are concerned, this is a currency pair that has been range bound now for the last few weeks, ever since things started to settle down. A wide range, of course, between around 122 and 126. 126.50, and again, we're not seeing any real signs that this range is breaking out. Like I said, we're currently around 123. The 125 level, of course, has been a little bit of resistance to the upside, but 126, 126.50, I think, is key as far as this particular currency pair is concerned. The one standout thing here is the safe haven component of the US dollar, the support that the US dollars continue to see throughout the last couple of months. That could potentially leave the downside here a little bit more vulnerable, more so than the upside. But then we have seen risk appetite slowly improving within the markets, and obviously there's going to be a lot more data to come. But at this moment in time, we're around 123, 122 continues to look a little bit vulnerable here, despite the fact that this initial data from the UK wasn't as bad as feared.